Wow, we're here again for Wealth on Wednesdays, and we're talking about REIT stocks of a different breed. REITs, as in REIT, Real Estate Investment Trust stocks that are of a different breed. Today, we're just focusing on how we can have a sector within the investment category that goes beyond its own quote unquote traditional limits. And I want to make sure that we cover this in a broad enough sense to where people get a feel for what can happen when we start to categorize certain stocks in certain sectors and they reap certain benefits. This is the beauty of it. REIT stocks. REIT stocks really break down to something simple. They're legally organized as real estate investment trust. They're legally organized as real estate investment trusts, and these are companies that own, operate, or finance income generating real estate. They own, operate, or finance income generating real estate. And so REITs have a special place in the income investor and dividend investors' portfolio. In particular, because many REITs deliver dividends over 5%, and those tend to lead to massive dividend reinvestment plans that then generate more shares, that then pay out more often. We have REITs that pay quarterly, REITs that pay monthly. But what I like about REITs most of all is as a REIT, they distribute at least 90% of their taxable income to shareholders through dividends. That's what happens. And so when we look at REITs being an investment strategy, they go with the ebb and flow of the real estate market, not so much the stock market. And when we have traditional REITs that are locked in to property, commercial property, warehouses, those things tend to be in tandem with how real estate is going. Are occupancy rates down for commercial real estate since COVID? That's going to have an effect on certain REITs. Are people still shopping at shopping malls since we've come along with Amazon and Temu and eBay? That's going to have an impact on certain REITs within the sector. And so looking at this, I want to look at some REITs that are different, that behave differently than the traditional sector. And to get us started, let's look at some popular REITs to begin with. And some popular REITs that are out there, one of them, I've been invested in it for years. Ticker symbol O, Realty Income, is actually, boom. It's a monthly dividend paying stock. And it's a monthly dividend paying stock. It's known as the dividend company. It's right there. And this thing has been generating income and raising dividends on a continual basis for years. That's why it's known as the dividend company. And so that's one traditional REIT that you may know of. Another one deals with something that we don't really look at in real estate a lot, and that is Public Storage. Public Storage is a company that deals with self-storage. right? Self-storage is something that is part of the REIT sector, but what you don't have to worry about is so much tenants paying rent or destroying your property. It's holding other people's stuff in warehouse-like storage units. So Cube, Self, all these are public storage unit companies, are storage unit companies just like Public Storage, but Public Storage is one of the largest and most popular storage REITs. Just so you know what else is out there. Now, here's something that we need to know. On here, I've talked about it on this YouTube channel. I've talked about it in the YouTube Shorts as well, and I'm invested in them, and I want to make sure that we understand that everything that deals with real estate isn't a REIT. Remember, these are companies that pass on 90% of their income, their taxable income, to investors as dividends, and that would not be Open Door Technologies, and that would not be Airbnb, right? These are not REIT stocks. So when I'm talking about them in other sectors, particularly in fintech, I'm not talking about them as REITs. I'm talking about them as being in the real estate industry, but not as real estate investment trust. They don't pay dividends. They're not part of what would be legally comprised as REITs, and so they don't count for what we're talking about today. I hope that makes sense. So let's look at this. Boom. These are REITs that I am talking about today. We've got some that are not by no means, some that are by no means traditional. And I love it because this is what they do. Number one, American Tower, ticker symbol AMT. Cell phone towers, right? Who would have thought about that? Cell phone towers are REITs. Cell phone towers are REITs, and American Tower is one of the largest that we have out there. And that company, I believe, is so well positioned with cell phone towers that no matter who your provider is, they're coming through American Tower in most cases. And that's how you're getting those maps of their coverage, because they're coming through American Tower. Iron Mountain data and document storage. You might know them more so for document shredding, right? But Iron Mountain deals with a lot of stuff that we wouldn't really consider as far as real estate investment trusts. But when they're having those shredding events and things like that, where's that paper going? It's going somewhere. Where's those shreds of paper going? It's going somewhere. It's being handled by somebody in some place. So guess who's handling it? Iron Mountain. You're getting data destroyed or stored in a particular place. Iron Mountain is doing that, and they're a real estate investment trust. Innovative industrial properties. Here goes something that we might not get. When cannabis first started going through a legalization throughout the country, yes, it was legal to open a cannabis dispensary in a lot of places, but how could you get land to grow cannabis? How could you get commercial property to sell cannabis? How could you get in a place where you can store cannabis for distribution? And so the financing of those purchases and loans in order to get into those properties comes through a company like Innovative Industrial Property that specializes in cannabis, and it specializes in serving those companies that distribute, grow, do all those things in the area of cannabis, which is a very special sector within real estate. They offer those financial services to those companies to get property, to get into distribution warehouses, to get into commercial spaces. With that, these are different, right? These aren't companies that are doing apartments, single family homes, senior living facilities. These aren't like, your hospital REITs or your healthcare REITs where they have, senior living, and they also have assisted living and mental health services. No, these are out of the realm of tradition. These aren't your malls and your outlets like Simon Property Group. These REITs are different because they cover specialized areas. They serve industries that are unique, right, and have different regulatory, operational, and financial needs, especially when you talk about cannabis, right? Especially when you talk about people's information nowadays in this data age, especially when you talk about information traveling across cell towers. Are we getting 5G? Are we not getting 5G? What's going on? So all that needs to be taken care of in a specialized fashion. They have a higher risk, but also a higher reward. Right now, I'll say as a stockholder in innovative industrial properties, right now that company has suffered. They have suffered, and now with the stock price that's gone below $50 and is still trying to inch back up to where it once was, the yield on that company now is over 10%. So think about that. Where you have Iron Mountain, which is climbing, and so as the stock climbs, the yield drops, typically. So think about that. The higher risk, the higher reward. Diversification is limited because they're usually focused in a particular area. They're not a broad-based company. And so if something happens with legislation regarding cannabis, that impacts innovative industrial properties. If something happens with legislation as far as data storage and people's personal information, that impacts IRM and AMT. All of that is part of the risk, not just because of what they specialize in, but because they also lack diversification. So I wouldn't put all my eggs in one basket. I wouldn't put all my eggs in just these stocks. And I would definitely not put all my eggs into just the real estate investment trust arena. I wouldn't do that. I wouldn't do that. I would not do that. And I say that in all sincerity because this is an investment that I would say you want it to cover a portion of your portfolio that could counterbalance bonds. Bonds suffer due to interest rates. Look what's happening with interest rates right now. You want to have it offset the stock market. The stock market being led by technology heavily right now, being led by multiple changes in those major industries and those that push that Magnificent Seven that kind of push the NASDAQ and the S&P into different directions. You want to use REITs to offset that, but you can also use REITs to increase your income. Like I said, these are beloved by dividend investors and income investors. And so definitely look at what REITs can do for your portfolio, even these specialized REITs that are of a different breed. Hope you got a lot out of this and that you're able to look at this and determine what you're going to do with your portfolio. God bless.